ASC might be in for another good day as Tencent and other tech stocks accelerated, lifting the overall performance of the bourse in Hong Kong. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joins us now for a market wrap. Makwe, very good morning to you. Thank you for your time. Give us an overview of how the markets have opened after digesting yesterday's midterm budget announcement.
Morning, Mpo. Our markets just followed what international peers are doing. The European markets, we've unfortunately opened down 0.5%, and all because we've seen that markets have been having a very good rally since the beginning of the week, and that has been at the back of markets having hopes that the US and other central bankers will probably slow down when it comes to increasing interest rates, as we know that the US Fed continues to be the pace setter. But this whole issue about the recession is still holding market participants. But as it is now, we are just down 0.5%, and we'll be looking forward to European Central Bank monetary policy meeting today, the announcements thereof, where we expect a 75 basis point increase.
Now, the rand seems to be chasing firmly below the 18 rand against the US dollar mark. Help us understand this development.
Those are good news for us, given that the fact that we've seen that for the fact that markets are expecting the U.S. Central Bank to start slowing down when it comes to increasing interest rates, that has made the dollar to slump, as we've seen that the dollar as it is now is standing at almost a 1 month low compared to a basket of other currencies. So the rand benefited from that. And also yesterday's midterm budget, for the fact that we expect our debt to be decreasing, for the fact that we expect that the government going forward will make sure that they continue to be prudent when it comes to the fiscal policy, that itself excited market participants, and it was even spilled over to our bonds. So that is helping the rand to trade below 18 to the US dollar.
AB InBev has reported its third quarter 2022 results. How did they fare in this period?
Better than market expectations, they managed to beat their earnings, and as we've seen that their outlook as well continues to be looking okay, mainly looking at expansions when it comes to the likes of Mexico and South Africa. And you look at the total revenue, it's up 12.1%, volumes up 3.7%, and normalized EBITDA up almost 6.5%. And the guys going forward, they should be able to benefit from the likes of their volumes and pricing. And fortunately, yesterday we had the results coming out of Heineken. We've seen that for the quarter, their revenue was up almost 27%, and their volumes were up a whopping 11%.
Now, EOH delivered a 92% increase in operating profit. Talk us through that performance.
I think the guys are now turning the corner, as we've seen that they had this dark cloud that has been hanging over them. And you are right, if you look at operating profit from continuing operations, which for us is more of a clearer picture, up almost 82%. And was also important, you look at their loss per share, they've managed to improve that by almost 91% to 15 cents per share. And going forward, the guys, we think that they've managed to make it clearer when it comes to their capital structure, because they've managed to refinance their debt, and also it gives certainty when it comes to their near-term liquidity.
Afrimat has published interim financial results for the period ending 31st August 2022. Help us make sense of those numbers.
Their diversification has worked for them, and as a result helped them to be able to maneuver, given that we've seen poor market sentiment when it comes to the sector, for the fact that we've seen concerns about global recession, for the fact that we've seen inflationary pressures, which also have an impact when it comes to profit margins. And yes, unfortunately, their results were impacted by the slowdown or the downturn when it comes to iron ore prices, the slowdown when it comes to the economy, which impacted their construction materials and also their industrial minerals business, and also the fact that we've seen the likes of your diesel, your explosive, your electricity going up, and as a result, the revenue is up only 7.2%, but the operating profit is down 12.1%, with profits as headline earnings per share down 14.5%. But the guys remain debt-free. They've got enough cash to be able to tap into other markets or ramp up the existing projects.
Very well. Thank you so much for that update. A look at the very latest in the world of business and markets there. Speaking to Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers. Let's not